Hello, everyone. Today on The Unrealists, we're going to do something a little bit different. Justin, my head of product, colleague, and good friend, is going to join me, and we're going to talk about a few different areas. First thing, just a general market update, what's going on in real estate, residential real estate in particular. Second, I am a Twitter noob, and Justin is a very hardcore Twitter user, so he's going to coach me up and get me on. And then lastly, we're going to talk about some prop tech companies that we really admire. We live and breathe prop tech. We love this stuff. There are a bunch of companies that we both love and hate. We're going to talk about the ones that we love today. So first things first, we got some, I think, relatively good news, which is that the CPI print, the inflation rate is down to 6.5% for December. And I think the market reaction was pretty positive. People were like, okay, finally, we're getting a little bit of a break. People were talking about mortgage rates finally easing because of this. Maybe Jay Powell not raising rates as much anymore, maybe even decreasing rates earlier. Justin, welcome to the show again.
Jay Powell, take it easy on us.
Take it easy, Jay Powell. I used to say, I would say the big homie. No, he's not the homie. He's killing us, but I understand why he's doing it. So yeah, what's your feeling on it?
Oh, let me look into my magic 8-ball here. I'm not an economist. I'm not even going to pretend I know what the Fed and Jay Powell is even thinking. CPI print is obviously good, right? It is good news. Hopefully that correlates into some mortgage interest rates decreasing. But we'll see. I can't remember. I think the Fed has another announcement in the next 2 weeks.
Next 2 weeks.
Right?
Yeah, that's right. Yeah. Next 2 weeks. Yeah. I think, for a while, people were expecting it to be about a quarter point. Everybody's hoping they were going to hold, but I think, it's more likely we're going to get a quarter point. But those percentage probabilities change over time. So you have to kind of keep an eye on it.
Right. Absolutely. I can tell you a quick tangent, or a quick story, if you will, on how interest rates have affected myself personally. So I think I shared on the last episode, I'm a rookie CRE investor, if you will. We own about 200 doors across 6 communities in the mobile home community space. And we actually had, Lightflex. We actually were approached in end of Q3, beginning of Q4 by a small repeat shop, real estate private equity shop, searching for deals before end of the year, and 1031 exchange possibly, or just looking to deploy capital. And they actually sent us an LOI, had potential, had everything locked up with sale, would have had a great exit, would have been a big W for myself and my business partners. And as interest rates started to climb, just underwriting the deal and getting the loan to close the deal proved to be too much, and they actually had to pull out. So Jay Powell, take it easy on your boy. You cost me some shekels. So
yeah, it's funny. One of my good friends, and he'll be on the show in a couple weeks. So I won't say his name because he's mid deal right now. But one of the things he told me, he's doing a multi-family development, I think down in Austin, Texas, and it's couple very large buildings, few hundred units. And what he told me was that one of the only reasons that the funding and everything has been able to hold out so far is that he's in an opportunity zone. Number one. Number two, they got some pretty significant either tax abatements or tax rebates from the state, and those two factors made underwriting that much more possible. He said pretty much everything else in town was shut down. There's just pencils down. There was no way to underwrite it. The cap rates had gotten out of control very quickly. And he said he felt very lucky, and the deal's not even done yet. And that's why I say I don't want to shout him out yet, but he said he was fairly confident that it was going to close, but only because of those two things. He said he felt like he lined it up just right.
Yeah,
but
very lucky.
Yeah, go ahead.
Yeah, I love those opportunity zone plays, right? No recapture, I think, if you hold the property and upon exit, and those are sweet deals.
Oh yeah, yeah, and it's funny. Like I think one of his, well, I don't want to. One of his properties, it's like just the corner of it happened to like be in the opportunity zone. It's like luck. It wasn't like he bought it thinking, oh, like yeah, this we're gonna do this deal and it's gonna be an opportunity. No, like the way that the laws sort of were framed during his tenure of doing these deals, it just kind of fell into his lap. So sometimes, it's like you create your own luck. You're grinding hard all the time, but he's become, because of that, kind of an opportunity zone expert. But we'll learn more about that in a couple weeks. And so just wrapping a bow on this interest rate conversation, I will say one thing that you and I have talked about. We've noticed pretty significant spike in activity on our platform, and I don't know for sure if that's rate related or not, but it does seem to be when interest rates creep down a bit, we see the demand step up very quickly. And we're not talking about huge moves in interest rates or in mortgage rates, right? But it just giving a little bit of breathing room is, we've noticed that people say, oh, okay, now it's time to lock in and buy.
Mm-hmm. Absolutely. Our traffic, at least our mortgage product, definitely spikes. It ebbs and flows,
Yeah.
every other week, depending every other, 30, 60 days, depending on what the Fed does and what interest rates are doing. I think consumers here, that interest rates are rising, right? Probably put a little fear, a little FUD out there, right?
Yep.
I mean, still near historic lows, right? I mean, in the 2s and 3s was obviously historic lows, right? And I personally don't think we'll ever see that again. But even at 5, 6, like historically, you zoom out, look at it long, like at a longer it's a x-axis, x-axis
Yep.
point of view, right? We're still pretty low historically speaking, but it's interesting. It's interesting to see the ebbs and the flows, right? If consumers think interest rates are kind of leveling off or possibly dip, right? We see a correlation and spike in our mortgage product traffic, as well as just even just general property discovery and search on our platform as well.
Yeah.
But it's also, I'm not sure if correlation is causation, right? Or I might say that backwards, but it's also the home. Winter time is obviously like the slow.
The nadir,
cycle of home selling and home buying. So as we come out of winter, we're already seeing our traffic up, I think like 2x in the last 30 days, in the last 13 days of the new year. And it's interesting. It's
it's fun to watch.
Business and
yeah, it's funny. I follow a lot of not counting Twitter, other social media real estate accounts. And one of the things that I keep hearing people say is this idea of psychologically anchoring to the 2% rates. And people say, oh, like you shouldn't buy a house because, the layperson will say, we shouldn't buy a house because rates are so high. And what I'm hearing a lot of these experts say is like, they are higher than they were before, but you can't kind of lock yourself into thinking, well, if rates aren't 2%, I'm never going to buy a home. And I keep hearing this idea. It's like the saying, you marry the house, but you date the rate. And this idea that you can always refinance later, right? And so as long as you're buying a home or investing in a property that you can afford the payment, marry the house, and then you can always sort of figure out how to change the rate later. And certainly this is a sort of higher interest rate environment. We don't expect it to stay this high for forever. But so talking about social media, all right, man, it's time for you to coach me up. I'm, as I said, an admitted Twitter noob. I'm on there. I read, but I don't do a lot of posting. I haven't figured out how best to interact, and I want to get into it because so many of our friends or colleagues are on there and active. And I think a good place to start is to give me some accounts that you like that I'll follow. Help me engage more. So I'm gonna do it live.
Absolutely. I love it. All right. I love it. Kyle's live reaction to retweet. So I'm not gonna say I'm the most active. I'm starting to be. I'm trying to be more plugged in, trying to build that personal brand, trying to be active in the little CRE investing that I do, and even the residential side of things. Just what we're up to with Unreal Estate. But yeah, I'll give you. Let's welcome Kyle to Twitter, and I'll give you some accounts that you should check out. So
yeah, by the way, I'm at
my...
KW. Wait, hold on a second. I'm at KW Stoner. So anyone listening to this that wants to connect with me on Twitter and tell me how I'm doing it wrong or coach me, send me a line at KW Stoner. All right, go ahead. And you should give your handle too.
Yeah, it's at JE Tannenbaum on Twitter. So JE Tannenbaum. So mostly my tweets are on real estate and software. So kind of the Venn diagram of my world. So all right,
see,
Kyle,
that's
first
now
one
you're
on my
already
list.
teaching me something. Oh, go ahead. No, because my tweets are kind of all over the place. I haven't really. I'm just like, oh, I like that piece of architecture. Like, talk about it, or I watched the NBA game last night. Oh, that was a cool dunk. Whatever. So you already gave me some info. So go ahead. I'm listening.
There you go. All right. First one on my list is the king of industrial real estate out of Dallas, Texas, I believe.
Okay.
Fort Worth, Chris. He is probably I think he runs a couple $100 million real estate private equity group, Fort Capital, if memory serves me correct. And he's buying up all the Class A and Class B industrial in the Dallas Fort Worth area. And he's a great follow. I've learned a whole hell of a lot just reading his tweets. I think he also has a podcast called the Fort Pod or something like that.
Okay.
Great follow. Let's hear your reaction.
Okay,
I'm on it now and see it.
I'm following him. Okay, here's a somewhat recent tweet. He's talking about Class B industrial, boring, not sexy looking. WeWork would have nothing to do with these buildings. Irreplaceable due to cost to construct and cost of infill land. High tenant demand in growing cities. In many locations offers true last mile location to rooftops. Why is he interested in last mile location to rooftops?
Right. Well, I mean, I think it's just my opinion. I don't know for sure, but last mile distribution is going to be key and clutch for anyone, right? Especially in major metros. You're always going to have this last mile delivery problem. Amazon's solving it, trying to solve it. But as the world becomes more on demand and more, if we can get our food delivered to us in under 20 minutes, we can get our Amazon Prime deliveries to us and within 48 hours, I think it is. And if you live near a hub, I think you can even get it within like 4 hours in some instances. Consumer expectations, right, of this last mile, like on demand delivery service experience, right? And that's going to be true for future e-commerce sites, direct to consumer sites, right? Having that distribution hub as close to as many rooftops, right? Your customers, as possible.
Oh, so he doesn't mean that literally. He just means rooftops, like places.
I think so.
Okay. I thought it was like a drone play or something. I wasn't sure where he was going with that. Okay. All right. So I like the thing I like about this guy. It's like what Warren Buffett used to say about like circle of competence. He's all in on industrial in this location. He becomes or has become a true expert in it. I think when you do that, it sort of starts to feed upon itself. The more you become an expert, the more you talk about it, the more people come to you, the more information you get, the more information you have, it goes back out. It's like a cycle. He's investing in it. He's living it. I love it. All right. So I'm in on Chris. Who else you got?
All right. Next, this one's going to be this counts really popular. I'm going with probably the president of the Guy Mafia on Twitter, which is Strip Mall Guy.
Okay.
He's at Real Estate Trent. He is anonymous.
All right.
Twitter.
Oh, he's anonymous. Okay.
Yes, he is anonymous. No one. I mean, people know him in real life. I don't. But he's built up a massive following, and I get a ton of value from following him and reading his accounts, or reading his tweets. Mostly all about your everyday average neighborhood strip mall.
Okay.
how to find them, how to acquire them, how to reposition them, how to sell, etc.
All right. I'm following him. The thing that I'm seeing with him is it's very I know nothing about strip malls or investing in them. I don't live near any of them. I mean, we're in downtown Chicago, but it's very accessible. I understand what he's saying right away, and then some of the stuff he's doing, like he has this tweet here. He has a friend. I have a friend who made $3 million in Silicon Valley and moved to a suburb of St. Louis. She and her husband live large, feel very wealthy. I have a friend who made $50 million, but lives in a building of millionaires in Manhattan, and he feels like he's barely keeping up. Anybody that's lived in Manhattan, I think, knows that feeling, especially anything less than 50 million. But yeah, it's like very accessible and easy to understand. And I like this. Okay, I'm with. Are you thinking about investing in strip malls? Is that like one of your areas that you're?
I have, yeah. So if what I mentioned at the beginning of the pod, if our deal had gone through, I was looking at moving out of the mobile home community space and into strip malls or Class B industrial, and probably influenced by both Chris and Trent here.
Yeah. Okay, that's very cool. Okay, who else you got?
I'm gonna go with a curveball. Someone I like actually followed from day one. I believe he's out of Houston, Texas, and he builds single family and small multifamily, I think duplexes, triplexes, quadplexes. His name is Donovan Builds, at Donovan Builds.
Okay, I got it. Following. Okay, so you're saying duplexes? Do you see duplexes? He does.
Sure.
What else do you
do? He does ground up development work for duplexes, triplexes, quadplexes. I think he just recently quit his full-time job. I want to say he was working as a project manager or at a bank. I don't actually recall. To go full in on development, and he builds in public. Talks about ground up development. Builds in public, full transparency on costs, whether he's going to keep them as rentals or sell them. And I believe he's crowdsourced even investment from Twitter, if I'm not mistaken. And just I really respect him, and I've kind of like watched him grow in Twitter, from the rafters.
Really cool. I love this idea of building in public. Yeah. Okay, I'm following. I see it. I also, something about, you and I talk about this idea of when we build things, we're building these digital products that, pretty much only exist on web and mobile. And when we build it often, there's a whole sort of competitive piece to it where we don't necessarily always want to let people know exactly what we're building, especially before we release it. This is a little bit different. And I think like I have an admiration, like I'm seeing some of the pictures here, like he's creating something from the ground, literally the ground. And before there was just a piece of land there. Now he's got an income generating piece of property. There's something cool about that. And seeing him go from zero to that, and now leaving his full-time job and turning this into, this is inspiring. I like it.
That's right. I'm gonna give you one more that I think is interesting, especially because it's in residential real estate, single family, but in a unique niche. His handle is at Student Rent Pro. Also an anonymous Twitter account. But his entire model is and business, and his building a public or Twitter persona is college rentals outside of a large state university. He doesn't disclose where it is. If I had to guess, I think it's somewhere in the Carolinas, North Carolina, South Carolina. And he fully transparent, builds in public, walks through his entire portfolio, his costs, his debt, his NOI, the headaches of dealing with college kids, or the maintenance nightmares, right? Broken windows that magically just happened. Of course, not the tenant's fault. To renting to 8 tri-delts who, claim they didn't flush anything down the toilet and their sewer line exploding. So fun account to follow.
Would I be correct in assuming that since the student is not typically like the primary payer, that you have less losses from just people sort of not paying rent or less? And there's also, I would assume, like a sort of social pressure to like not be evicted as a student. Like to me, it seemed like a completely different market of people that the parents are, largely responsible for paying the rent.
So you would think that, right? And if you go through some of his Twitter threads and his tweets, you'll actually find that he's never had a tenant not pay rent. He's never evicted anyone, and he attributes that to the student themselves actually sign the lease, not their parents. He doesn't do co-signers, and it's one signature for the entire property, so that they a group of roommates will pick the leader. He said that social construct of you're not going to screw over your fraternity brother, sorority sister, friend,
Yes.
right? Like he's responsible for the monthly payment, right? And you
Yep.
guys can all Venmo him or her, and he'll make the payment. He said it worked for him for 10 plus years.
Oh, wow. Okay.
So
Yeah, that makes sense to me. Really cool. Okay, I'm going to highlight one that I do follow already. That I follow them on other social media platforms. It's not always real estate. It's a mix of things, but Earn Your Leisure. So I recommend that one as a follow for you. EYL. They just talk about a lot of really. I think most of my social media, if I think about what I'm consuming social media, it's a lot of like real estate, investment, tech, maybe some comedy, right? But the ideas that I've been getting from some of these accounts are always really good, and from that one in particular, really open mind, not just locked to the United States. They'll often talk about when they travel, what they're seeing overseas, etc. So really good ideas there.
I have not heard of them, or I've not heard of this account. Just quickly scrolling through. Interesting. Seems like a lot of short form content is what I'm seeing, like 30-second minute videos, like clips.
I think they've got a podcast that they're slicing up and dropping as micro content in multiple different channels. I found them because I can't remember the name of it. There's another real estate guy who I found him because he flies his own plane to different places, to all his property all over the place. It's like a really weird, and they were interviewing him. That's how I kind of like fell into it. But yeah, that's one of my favorite accounts. I usually see them on TikTok.
That's awesome. Okay. I'm not on TikTok, so maybe on the next episode we can do the segment. Kyle introduces Justin to TikTok.
I love that. I'm a TikTok addict, actually. So I don't know if I want to like give that to you and give you the problem. I have to put myself on a timer. It has so much good information. And I think as an algo, and it actually reminds me of Twitter that way. I feel like Twitter will send you more stuff similar to what you're already engaging in. And it's of like almost like of an intellectual pursuit versus if you're on like, I don't know, name another platform and it's more about pretty pictures or whatever it is, right? It's a little bit different.
Instagram, sure. Mm-hmm.
Sure. Okay, so I'm up on Twitter. You're going to keep me honest. I'm going to try to start, engaging more and enjoying it. Let's transition. So prop tech companies that we admire. You want to start it off?
Yeah, I'm going to kick it off with, and actually full disclosure, Unreal Estate is a client of theirs, but it's a company I really admire from a product perspective in particular. It's called Cherry, Cherre, Cherry. You can find them at cherry.com. And, I think their tagline is follow your data. So they built this awesome data platform and GraphQL APIs to connect all of your real estate data in kind of one central middleware, and allows organizations to better understand their data, make better investments, management, and underwriting decisions. We use them at Unreal Estate. Their product is fantastic. Great customer support. I love our rep over there. Anytime we have a question, they're always there to help. And just from a pure engineering perspective, the product's really, really impressive. They've standardized and normalized, dozens of real world objects into a single unified GraphQL endpoint, which is just, it's badass. And we love it. It powers portions of Unreal Estate, and it's great.
Yeah, increasingly so. We're fortunate. The reason I connected, we connected with them to begin with, was we share an investor, and that investor a few years ago, kept telling me, you really got to meet LD. You really got to see what they're building over there, because it can solve a lot of the. They knew, this investor knew my vision, and said, I know how you're thinking of doing it, and this would actually help you leap forward, get there much faster. I said, hey, I'm open. And so, when I met them, blown away immediately by what they had built and what they continue to build today. And one of the things I like about it is, one of our goals, as you know, is to always be adding insights and making it easier for someone to buy or sell, right? We're sort of, people think of us as almost being like anti realtor. We're really not. Like, we have plenty of realtors that work for us or on our platform. We are anti, fee, if you will. We want lower commissions. We want efficiency. We want speed. And as a company that's every 2 weeks, essentially, we're pushing new code and trying to give our users features to add speed, add efficiency, reduce fees. When you plug into something like Cherry, first of all, they make you faster, make your engineers. We're able to move much more quickly using their APIs. Second thing is, we're able to always add those feature sets that have, these insights, right? Like, what was this last one we added? Was it, I can't remember, was it the flood risk one? Did we get that from Cherry?
Climate risk. Yeah.
Climate risk.
Given a specific geo, what's the climate risk of earthquake, flood, hurricane, drought, etc.?
So people think this stuff is easy, right? To go to a specific property parcel and tell you exactly what the risk is for all of those things. It actually isn't, right? But some of these connections we have like that make it easier for us to integrate. And all of a sudden, if you're somebody buying a home and, name the area, it's actually, because of all this climate risk is happening all over the place now, but you really start to be able to calculate, what is my risk of this place flooding, of this place having an earth, whatever it is, right? Whatever the sort of climate malady, in a very detailed way. And they're a company that makes that possible for us. I love that. So,
couldn't agree more.
I'm going to do one. This is one we've talked about before, briefly, but renthub.com. Founder is John and Jaku, one of my friends. We've talked a lot about rentals, both internally and just, to our colleagues in the space. And what they've built is this really interesting slice of data around exactly all the things you should know about when it comes to rentals, like the pricing and the trends. And if you're buying a property as an investor, they've got some information in there that will enable you to better make a decision quickly. And I'm not gonna say the names that are using this right now, but there are some big names, big companies that are plugging into this data and helping them make, buy hundreds of SFRs at a time, single family rentals. And then as a consumer, you can actually use this. People don't know this. You can use it as a consumer too, and decide, okay, I'm looking at a few different apartments as I move into a new city. How much should I actually be paying? And often there's a pretty serious differential between what the landlord is offering you and what the true price should be. And so whether you're a consumer or you're a big corporation trying to buy and rent properties out, RentHub has got some really great data for you.
Got it. I need to check them out some more. Actually, I wasn't familiar with them until you had introduced RentHub to me. I think via Slack a couple weeks ago.
Yep.
Product looks awesome. I've got one for you, and I think you actually had them on the pod. If I think that's right. I'm gonna go with the problem of home warranties in.
Oh yeah.
In the single family space. home warranties are notoriously bad. Anecdotally, my cousin's, HVAC's gone out, I think last week, and he has, I won't shame him. He has one of the larger, players in the space, as a home warranty. And, they're basically like, yeah, it's going to take 3 days and you can only use one of our approved HVAC vendors to handle it. Right. And it's like,
Right.
You can't wait 3 days to, for
with
to
no
be without heat in the middle,
yeah.
in the,
Yeah.
right in the middle of winter.
Right.
It's like it's a travesty. It's a crime. It's an interesting problem to be solved. So I'm going to shout out Armadillo Home Warranties. I think they've approached home warranties from the ground up. I think you had Matan on the pod a couple weeks ago, months ago. I'm going to shout them out as someone I admire in prop tech, and him and his team's ability to to rethink home warranties.
Yeah, Matan. So this is a couple things. One, it's a good example of how you can meet not only great business partners, but people that can be good friends in the future at conferences. I went to this conference with very little kind of expectation. Like, I'll try out a conference. I ended up meeting Matan there, and now I think we'll definitely end up doing some work together. I'll tell you a little anecdote on this to tell you how much the sort of enmity there is in this industry around home warranty. I was in the car with my mom over the holidays, and she said, "Well, what are you working on right now? What are you excited about?" And I said, "Oh, we're working on so many things, but I know you've had some issues with your home before. We're gonna, I think, do a home warranty product. What do you think about that?" And she like almost yelled at me. "Oh, do not do home warranty. It's a scam." She went on and on but from real personal experiences. And I said, this is why it's so important. We wouldn't, I said, Mom, I wouldn't do it if it was going to be a scammy thing. We only do things that help our customers in a real way. And she said, well, there are these, they have it's this contract, and it has, very long, and there's this fine print, and the fine print's where they get you. And similar to what you were just saying about your friend, and, it's 3 days later and you have to wait and you can only choose this one. And I said, Mom, what if it was literally a single page contract, plain language? We cut out all that stuff. She said, well, that would be that. Now you have something. And I said, okay. Clearly, Armadillo is, they're on top of this because that's what they've built, right? It's a very simple. I think it is literally a single page contract without any games in it, and that's one of the reasons why we got excited about them. Shout out to Matan. I have one more for us. Maybe not to say this has to be the last one, but one additional one. This is literally maybe my favorite prop tech company outside of Unreal Estate, Airbnb, which I think some people don't think of as prop tech. But it's one of the, obviously, early pioneers. Brian Chesky is the GOAT. We constantly steal. I haven't met him yet, so I can't say. I've not gotten any advice. I've listened to maybe all of his podcasts, all of his interviews. I'm a little bit obsessed that way, and so I take ideas from him all the time. And I think besides building something that I think there's culturally something there too that I really identify with, which is that they're sort of a cockroach company in the very beginning. They weren't making any money, so they were selling these cereal box, they were cereals that were novelty cereals, and then and I can't remember who it is. It may have been Paul Graham or somebody.
Obama O's, right?
Obama, yeah. So they decided, they're going to rent out these air mattresses in the middle apartments, which at the time everybody thought was crazy. I actually had a business idea that I tried out that riffed on that, but I'm not going to get into that right now. But anyway, yeah. So not only have they built, and I think some of their core values I really admire. They're always trying to do right by their customer. They I think have a certain amount of ethics around it. I remember in the beginning, maybe a few months ago, they tweeted something about making improvements, and then Sheil was like, "Hey, how about this whole thing where you think you're paying one price, but there's all these extra fees at the bottom. And Chesky right away is like, all right. Like I think 2 weeks later they fixed it. I mean, even though that was something that people complained about for years, but regardless, the way they the way they think about design, because these are a bunch of like RISD grads over there, the way they think about just bringing value to the customer are things that I'm actually more of a hotel guy, honestly. I like, but I use them both. But just as a company, really admire what they've built.
Yeah, no, I that's a great point. Internally as a product team and even as our brokerage team, we often go back to, I think it's the Airbnb case study where Chesky brings everyone in a room and it's like, I think he just got done reading or was inspired by the fable has it inspired by I can't remember if it was the Four Seasons book or Be Our Guest, the Disney book, or maybe a combination of, right? And he's brings everyone in the room. And he's like, what's a 5-star experience like for our hosts, and then what's the 5-star experience, for guests that are searching, discovering, finding a property. And I mean, his team went through that customer journey mapping exercise from the moment you discover a property to you book it, to how you arrive, to when you arrive, like, is there a gift basket waiting for you, like to checking out, right? To getting to the airport. Like they thought about that, like end to end customer journey of their users. And, if I remember the story correctly, he's, in the conference room and it's, they get to like the 5-star experience, and then he like turns around and he's like, okay, but what's the 9-star experience? Like how do we continue to just keep pushing? And I can't remember if it's from the Four Seasons like mantra or Disney's Be Our Guest. But we do that internally at Unreal Estate. Like we're constantly pushing as an engineering team, as a product team, as a design team, as our brokerage team, to our client success and service team, of just thinking through, the both the buyer journey. So if I'm buying, a real property, or if I'm selling real property, what is that journey, and how do we make it so frictionless and such a great experience that, you want to tell your friend about it. And I really admire that about Airbnb and their company.
Yeah. I remember early on when we started working together, you brought that up, and that was one of the things I said, oh, we're on the same wavelength. We both are thinking the same way, because that idea of making it so you're at least striving for the 9-star. You might not ever get there, by the way, right? It's about like, it's not just the destination. It's like, okay, the process. How do we make this so that the people that use our platform walk away from it like, damn, that was good and different from everything else I'd already done before. And I think the thing that people, and it's a little bit harder in our industry, because you have to remember, typically people only buy, a few houses in their lifetime, right? Typically. And obviously you have investors that are a little bit different, but you really have to impress upon somebody that experience that one time you get them, because you may not see them again for 5 years, right? And so we take that very seriously, and it's been fun getting the whole team's mindset around how do we get that 9-star, 5-star, 9-star, whatever it is, right? But we need to be striving for that every day, and that's how you sort of create something that's very different for people.
Yeah, good point. I almost wonder if that's why Bob Iger's back at Disney. Is it did the previous CEO lose that imagination and that experience, right? It was probably more my layman's understanding of it, right? Like what I've just read and tried to read between the lines is, Chapek, the previous CEO. He was very spreadsheet driven, very operational, finance driven, like, right. As where Bob, was Bob Iger, that is, was more, imaginative, guest experience, 5-star experience across the board. Like, the Imagineers, I mean, hell, the Disney bands that, under his leadership, like everything about it.
Yeah. It's funny. I read, there's a pretty good deep dive in that in the Wall Street Journal. And there were two lessons that came out of that for me. First of all, one, I thought the way that he treated talent it surprised me. Like, I don't know if you remember very early on, they got in this argument with the woman who is in the Marvel series. Blank on her name. She plays the Black Widow.
Scarlett Johansson.
Scarlett Johansson. Where
ScarJo.
ScarJo, they didn't want to pay her, so like she'd hit all the targets, and I think they were like, no, we're still not paying you that. And instead of sort of, I think Iger was so good at he was managing the parks, he's managing the movies, he's managing the talent. Like I think he could massage that, and that blew up to the point where it was a real lawsuit in the press. So that was my first take where I was like, ooh, that's something's not working there, because if you can't just like call one of your biggest stars, team, get them on the phone and be like, hey, let's figure this out without it turning into a lawsuit, something's going really, really poorly. That was the first thing. The second thing that I learned from that was whenever you're a new CEO and the old CEO who's beloved is kind of just hanging out in the wings at all times, you have to be perfect. There is no room for any sort of mistakes, so you get hit with a pandemic. That's now you're really under the gun, right? You're trying to launch streaming against theaters. Like there's just no room for error. So as soon as he slipped up a couple times, and I think he missed earnings, you're done when the guy is still sitting in the room. He's like, oh, I'll just take the job back, right?
Right.
But yeah,
he probably didn't have a chance.
He had very little chance, I think, in that situation. But I'll tell you that there was a huge complaint, not only from the customers about the experience, but the employees were demoralized by what was happening. What I found interesting about that whole thing was that they also want to give the consumers an amazing, experience, right? And they were getting frustrated that was going downhill. So I think part of what you're saying is correct, right? Like this new person comes in, he has a different way of running it, and people are like, hey, like, I'm not sure this is good for me. I'm not sure this is good for the customer. I'm not sure who this is good for. And then it turns into a situation where the other guy's like, I'll just take my job back. I loved it anyway.
Awesome. Perfect.
All right. So
this is a great pod. I loved it.
Yeah, I loved it too. All right. Well, we're going to do it again soon. I think that closes it. So we talked about today, general market. Looks like inflation is easing, which I think is great for everybody. Besides just like buying eggs in the grocery store, it filters all the way through, from that to, buying a home, and those things are looking up for this year. I'm, getting more onto Twitter. I'm going to get some more coaching, follow some great accounts. And then prop tech companies we admire. I think it's important to be humble in this space and take inspiration from the other folks that we either work with or just get to view and learn from. So that's it. Thanks, everyone.